companies have been reporting blockbuster second quarter earnings. United Health, Aetna, today Cigna, all beating estimates and have seen their stocks surge so far this year. In a few moments, we will be speaking with the Cigna CEO, David Cordani. But first, we want to take a closer look at the industry. The biggest challenge over the next year, successful implementation of Obamacare. Michael Mann covers the health insurance companies for Bloomberg Industries. And Michael, the big issue is getting enough young people to sign up for insurance. This is going to make all the difference for these companies, right?
That's absolutely right, Sarah. I think the most important factor is to have a very diversified pool of individuals that will be part of these new uninsured that will come into health insurance. If we get a lot of young people that don't have a lot of health illness, then that means that they will be able to offset the incremental risk of people that come into the pool that have a higher number of health ailments.
Talk about what we've seen a little bit in terms of higher premiums across the United States in anticipation of this law.
Well, in some cases, we've seen the premiums have gone up in a few states. In the state of California, I think it was anticipated that we would start to go ahead and to see higher rates there, a few other states as well. What we are seeing, though, as far as the bids that have come in for the exchange programs, and these are these new marketplaces that allow the uninsured to gain access to health insurance at subsidized rates. In many cases, those rates are actually coming in a little bit lower, I think, than people had expected. So it appears to be a bit of a balance.
Michael, what kind of participation uptake are we seeing on the part of insurance companies and the state-by-state exchanges that are being set up?
Good question, Eric. I think that originally people had thought that managed care companies would be a bit more aggressive in their participation. But at this point, actually, it's been a bit muted. United Health will end up going ahead and participating in about 4 individual exchanges and 8 small business exchanges. Cigna today indicated that they plan to participate in only 5. So really, the managed care industry is taking a wait-and-see attitude about the new exchanges, trying to assess what the incremental risk might be, who might end up going and participating in it, and trying to figure out what profitability will be going forward.
So what does that mean for healthcare then? If the managed care companies like Cigna, for example, and we'll be talking to the CEO any minute now, aren't participating, taking this wait-and-see attitude, what are the implications?
Well, I think that you have to understand as well that the health insurance industry is still somewhat fragmented. Even though many of the publicly traded managed care companies have been muted in their expectations for participation up to now, a lot of not-for-profit health insurance companies have decided to be more aggressive. Among the publicly traded companies, WellPoint has decided to participate in a number of exchanges, and that really goes back to their legacy as a Blue Cross and Blue Shield provider. So overall, while the expectation was for greater participation for some of the publicly traded companies, it appears that that muted response is being offset by not-for-profit health insurers coming to the fray.
All right. Well, thanks so much for joining us on this. It is a timely topic, and we will continue the discussion with Cigna CEO. Thanks to Michael Mann of Bloomberg Industries for joining us from our office.